Hello, happy Sunday to everybody. Trying to get our technology working here. This is Mornings with Michael, weekend update. So sit back and relax and we'll share what's going on in the world. First, let's go to our word of the day. Share the screen. Homonymous. Homonymous is our word of the day, having the same name as another, i.e. a namesake or pertaining to a homonym. Coincidentally, the judge and the lawyer had homonymous family names. Though complement is homonymous with complement, the words describe two different actions. So there we go. Homonymous is our word of the day. Trying to raise your vocabulary as well. So let's stop our share there. Let's go to our S&P 500 map. See where things ended up for the day. They looked pretty rosy at the beginning when I looked in the morning, and then things changed rapidly. So let's share our screen. So as you'll see, tech is down. Look at all this red in the semiconductors. It was bound to happen. Anything that gets 5 to 7% above the index's 50-day moving average often corrects. They don't like it being that far above the average. Energy is mostly up. Financials were doing a lot better than the day before. Consumer cyclical was down. Tesla continues to stagnate. It almost looks like a short, but I wouldn't recommend it at this time. Real estate was up. Some of utilities were up, so that's kind of our heat map where things ended. Let's look, kind of go around MicroStrategy. Pull back. No, it actually didn't pull back. Continued up. This is starting to look like a high tide flag right here. Continue to watch it and see how it develops. So let's go to the dollar. Dollar actually bounced, sold off in the beginning and bounced up to its 50-day moving average. So maybe silver pull back a little bit, not too much. Gold is just kind of streaking higher. When it moved above the 50-day moving average on this gap up, looks like it was the time to get in. Either that or this day when it kind of broke out above 191.36. That is definitely a breakout. Look at our Arrow Copper. Had a strong pullback to the 20-day moving average. Actually pulled all the way to the 50-day moving average and bounced up to the 20-day moving average. Southern Copper, amazing, just keeps on moving. Like I recommended, on pullbacks would be the place to buy here. See, when we got up here, pull back, got up here, pull back again. Not quite a double bottom. Came back here, pulled back again. So that would have been the safer bet. And FCX, Freeport McMoran. It gapped up on Thursday and pretty flat on Friday. Vale, it's pretty erratic. move up here, pull back, move up again, pull back, move up here, and pulled back lower. Hasn't taken out this low, but it's pretty interesting. Real just continues down. 37 days is earnings. This does not look to be in a good range. Be a good short. See, we have this pullback here. When it bounced up to the averages and couldn't move higher, that's a great place to short. Comes back, bounces up, can't get up to the average again. Could add to your short. Pulls back, and now it's just flailing. BHP is acting very similarly to real. This isn't a place to short here, but when it couldn't get up to the 20-day, this is possible short, and it just keeps trending down. And you could possibly add right here. See, once again, it couldn't get up to the 20-day moving average, but shorting is one of the most difficult things to do in any type of trading. So you need to be really careful. You need to be due diligence. You need to get how to trade in a bull market pretty well before you can move on to the bear. That's my personal opinion. And let's go to the yields. Yields didn't really move too much, staying right about there. Tried to move up to the 50-day moving average and pulled back. 20-year yield. So the 10-year is at 4.08%, and the 10-year did bounce a little bit. It ended at like 3.26. We're going to discuss the VIX a little later, but let's take a look at it here. So we've been talking about this gaps. It was stuck between two gaps. This is above the gap, so you can see it's taken out that gap now. And now it just needs to take out this gap and this gap. So we got two lower gaps. We'll see if it can take that out. And you know what happens when that happens? The S&P 500 goes up. So the VIX is an oscillating index, and at 99.95% of the time will fill all gaps. S&P 500 pull back to its 10-day moving average on 3.09% volume. We'll take a look at that in a minute on our PowerPoint. So take a look at our equal weight. It's down even less, 0.11%. The NASDAQ. So just look at how far this has gotten above the 50-day moving average. So that's generally why we have a pullback. Looks like it's pulling back in between the 10 and 20-day moving averages. The equal weight pulls back to the 10-day moving average, down 1%. And what did the NASDAQ have? We had 1.44%. IWM really pulled back. It had been the leading index. I guess it didn't pull back that strong. It was down only 0.06%. And Dow Jones is pulling back to the 20-day on 0.2%, an increase in volume. So let's go to the news first, and then we'll get to our PowerPoint. This is the news on Friday. European central banks, Nagel said the ECB could cut rates before the summer break. European Central Bank is ECB. ECB. Markets understand ECB monetary policy at June cut depends on data, but prospects have brightened. Should see German economic upswing in second half. German debt break will allow some leeway. The Fed's messenger yesterday said he sees rate cuts this year if inflation keeps cooling. I will gain confidence when I see inflation continuing to move down, he said. The FOMC will then be able to start reducing the level of restrictiveness by moving the Fed funds rates down if the economy performs as anticipated. I expect we will find ourselves in that position sometime later this year. On to our sector news. Costco, quarter two EPS, $3.92 versus $3.62. And it gaps down and falls below two moving averages all in one fell swoop. The revenues rose 5.7% year over year to 58.44 billion versus 59. This is why their revenues came in lower. Total comp sales, including gas and currencies, were only up 5.6% versus estimate of 5%. So this is why things are gapping down. And our next company is Gap, by the way. Interesting. Quarter four EPS 49 cents versus 22 cents. It doesn't gap down. It actually bounces off the 20-day moving average, up a little over 8%, 49 cents versus 22 cents. Quarter four revenues rose 1.3% year over year. Duckhorn portfolio, quarter two EPS 14 cents versus 18 cents. And guess what? We got a gap down. Beta came in at 42.7 million versus estimate of 39.76 on revenues of 103 million. Funko, this was a big winner in the pandemic. It gaps down and closes on its low. Earnings were up 103%. Now I gotta get my, not sure why this is not functioning. There, we got it back. Funko, quarter adjusted EPS 1 cent versus estimate of 4-cent loss. This is why it gapped up. And on to Limoneira. Quarter one EPS 21-cent loss versus estimate of 27-cent loss, and it gaps up and it looks just like our previous company, Funko. So its earnings negative 18 cents. Here it says negative 21 cents, but had 39.37 million versus estimate of 40.58. Says it continues to explore strategic alternatives to maximize shareholder value. Potbelly. No, that is not Potbelly. Here we go. Quarter four adjusted EPS 2 cents versus estimate 3 cents. It's down 4.81%, almost 5%. On adjusted EPS 2 cents versus 3-cent estimates. Earnings are down 78%. American Outdoors, quarter three EPS 8 cents and revenues 53.4 million versus 50.9. Initially sold off and then roared right back, up 3.33%. Is a cook in the house? Traeger Incorporated, quarter four, adjusted EBITDA 13 million versus estimate 10.65 million on revenues of 163.749 million. and their stock is down nearly 14%. Amazing. Sees full year revenues 580 to 605 million versus 608.33. I guess that's why it's down. And guidance, air sale, and energy, industrials, and materials, Q4 EPS 2-cent loss versus estimate of 45-cent gain. Yes, this is an ugly day, down 26%. I hope nobody here was holding air sale. Concrete pumping holding. Q1 adjusted EBITDA 19.3 million versus estimate of 25.91 million and revenues of 97.711 million versus 98.08 million. Initially moved up and then sold off, down about 5%. Leidos awarded 158 million U.S. Air Force Command and Control Emergency Management contract. And there's virtually no reaction to that, I guess. Quanix, Q1 adjusted EPS 18 cents versus estimate of 11 cents. Initially moves up and then pulls back. So EPS went up 0, I guess, because last quarter at this time was 18 cents as well. Cautiously optimistic in the future. So the guidance pushed it down. Snap One Holdings, Q4 adjusted EBITDA 29.8 million on revenues of 264.388 million versus estimate 266.1, and it moves up over 9%. Healthcare, Medtronic, to buy back an additional $5 billion worth of shares, and doesn't really get a reaction. Actually, some selling, although it was only down 0.02%, pretty flat. Arcturus Therapeutics, Q4 operating income $15.139 billion loss versus estimate of 22.5 million. It sold off to its 50-day moving average, got support there, and bounced back down 0.9%. Macrogenics announces initiation of phase 1 study of MGC026. Macrogenics first topoisomerase 1 inhibitor-based ADC said cash equivalents, and marketable securities balance of 229.8 million at the end of December. Sees cash and cash equivalents and marketable securities balance should extend its cash runway into 2026, and their stock is falling on that news. Anytime people bring up cash and cash equivalents for the runway, it would give you pause. We missed that one. AVGO, Broadcom, Q1 adjusted EPS $10.99 versus $10.29. So initially went up. Q1 revenues rose 34% year over year. But when NVDA started selling, all the semiconductors sold off as well. Anybody close to AI, we'll just have to wait and see if this is going to carry over to next week. DocuSign beat earnings, big gap up, and then pulled back to its 50-day moving average. Q4 non-GAAP EPS 76 cents versus 64 cents, up 17%. Here it says it's up 76%. So pretty much what we just said. I just like to double check every now and then. Domo Incorporated, Q4 EPS 51-cent loss versus estimate of a 5-cent loss. And yes, we are diving on that news. Down 13.6%. Guidewire Software. Quarter two adjusted EPS 46 cents versus 23 cents. Initially gapped up and then pulled back, filled in the gap down to its 20-day moving average, down up about 0.62%. Marvell announced sold off pretty strong, announces $3 billion addition to stock repurchase plan. Quarter four adjusted EPS 46 cents versus estimate 46 cents. And you're not going to win fans when you just meet your estimates, especially in high tech. It's down 11.36%. MongoDB. Quarter four adjusted EPS 86 cents versus 46 cents. They beat. Revenue rose 27% year over year. Not sure if this, it's been on a big downturn and is below its 50-day moving average. Anytime you can go down here temporarily, but now it looks like it's living below the 50-day moving average and now down below its 200-day moving average. And as we've said in the past, nothing good happens below the 200-day moving average. So this is the one we put a number of options on. You're correct again. Quarter four adjusted EPS 4 cents versus 3 cents. Quarter four revenues 276.3 million versus 258.31 million. Said full year 24 with 1.1 billion of ARR, growing 39% year over year. Sees full year 25 adjusted EPS of 10 cents to 13 cents and revenues of 1.186 billion to 1.196 billion versus estimate of 8 cents and 1.1 billion. So earnings are up 300%, 2 of 300% quarters in a row. So we'll see if it can get some forward momentum. I believe we have one more company. Yes, we have Big Bear. Quarter four EPS 14-cent loss versus 5-cent loss, and you're not going to win many fans with that. A big gap down nearly 32%. It just dives. So we had big selling over here on high volume, lower volume on the buy. It tried to move higher, and this is a really bearish move. And then the following day, tried to move higher and sold off again, middle of the range. So this should give you some pause about the earnings coming forward. So big sell-off, and there we have it. So let's move to our PowerPoint. Before we do that, let me show you one other thing. This is our annuity. So one of these companies is now offering a 45% bonus on any new money coming into an annuity. $100,000 will immediately turn to $145,000. So if you want to learn more about this, and then with index investing, you can still be a part of the NASDAQ, S&P 500, global indexes, and with virtually no risk of losses. So if you want to learn more about that, feel free to reach out to us in the comments. As you can see, index investing bounces with the market, and this average beats index investing by about 5% per year. Cannot lose money. We have shown in the past that every 8 years there's a big downturn in the markets. There's potential for that happening in the future. We got a lot of debt piling up. So we'll look at some of those risks. Now, let's share our screen. Here's the PowerPoint. This is my last slide. We'll start it as being the first. So in 2000, there was a 38% drop in the markets. What happened 8 years later? A 54% drop in the markets. Look at that ugly bottom. And then about 8 years later, 2016, another big pullback in the market. So it's doubtful it's going to happen in a presidential year, but anything can happen in the markets. Are you prepared for this? This was a big pullback, a 38% drop in 2020, but it was a V-shaped recovery, recovered really soon. And where will we be in 25, 26? This is with a Fibonacci retracement, 53% drop, 50% pullback in the market isn't unprecedented. So there you have it. It is your time to get prepared. Let's take a look at the diamonds. So this is a bearish engulfing candle right here. It bounces. This is like not quite a bearish engulfing. This is like a spinning top. And then it has come down. This could be an inverted hammer. So we'll just see, kind of feel like this is going to pull back a little bit. Let me see if I have written down the levels. Bring up my notepad. So 392.05 is the levels. Let me see if I can bring up where we ended on Friday. So we did pull back 387.99. It's kind of where we ended. So it kind of hit that target, I would have to say. So let's go to the Russell 2000. This looks like a bearish engulfing, just kind of engulfs the previous move. It's pulling back here. And let's look where, so 197.41 is for the Russell. Let's see where we ended off. I'm just looking on my little handy chart here. So 206.83. So it'd be a little bit of a pullback in Russell here. Moving on to the NASDAQ, the QQQ. Let me pull this up. Go over here and pull up the QQQ. So it ended at 439.02. Drastic move down. So we had a 448.21 could move up to, and a pullback to 441.85. So it has already hit that one. And now let's go to the S&P 500. S&P 500 looks like a bullish engulfing. I mean, bearish engulfing as well. So 498.67, and let's see where we left off. Left off at 511.72. So we do have some measure to go. So we'll just see if we pull back. It may not be till later in the week or possibly the next week, but that's where we kind of foresee things moving. Now this is with NVDA. This is huge bearish engulfing. Almost filled two gaps. Fell 100 points on like just massive volume. This is a stochastics pulling back down, got the little leg going down, and on the CCI, commodity channel index, doing the exact same thing. Where it goes from here is anybody's guess. But it filled this. We got two more gaps. We got a gap here. We got a gap here. And we got a gap over here. Not all gaps filled, but 80% of gaps fill. And then they may return to the trend. So we'll just have to wait and see there. This is a closer look at NVIDIA. You can see it's a big bearish engulfing covering 2 days of move. And the volume is just monstrous. May have gotten ahead of itself. It's possible. Some people are saying it could be a blip, or it could be a longer turn in the market. We wouldn't know. If we could tell you that and foresee it, we would be in a different place than we are now. I'll tell you that. Okay, this chart came out. One of three small public companies is unprofitable in the Russell 2000. Why is that? A lot of them are biotech. Non-earners are examples of biotech. And here's the percentage of non-earners. Over 30%. And non-earners of biotech. Looks like it's just under 30%. This is the highest level on the non-earners in a long time. So hope is not a strategy. The S&P is still hanging on to hope. What are they hoping for? Well, they're hoping that the Fed will cut interest rates 6 times in 2024. I think right now that's impossible. According to Wall Street, here's what it means for stocks. So I think it could pull back. People have been talking about a pullback for a long time. Maybe this sell-off on Friday could be their excuse to start selling shares. We'll just have to wait and see. So the Fed's recession gauge is screaming recession while all the Fed members and their mouthpieces can't say soft landing enough. This isn't my opinion. This is, I'm just sharing this because the news is out there, you should be aware of. Fed recession gauge near a 40-year high. Double line Sherman sees a deep slump. Okay, now 44% of Americans can't pay an unexpected $1,000 expense from savings. We're just not wired to save, an expert says. So what does it say? It may not be our fault. We're just not wired to save. But there are steps you can take to make it more emotionally satisfying to set aside money. And like we say here, on Mornings with Michael, you should always pay yourself first. You work for somebody else, you're making money, you should pay yourself first, set it aside in a savings for a rainy day, and you can also invest it to help grow your money. So this is the AAII survey. The bulls pull back, and now they're just growing. There's a growing number of bulls as the S&P 500 goes up. So interesting. If we look right around here, that right around November, it hit the bottom, the least amount of bulls. And what happened in November? Well, the market broke out. That's what happened. We'll take a look at that in a moment. Here's a weekly change in bulls on the AAII survey. Bulls versus bears, 59.4 versus bears, 16%. This is on March 6th, February 28th, February 21, February 14th. Historical average 37.5. 1 year bullish high is 52.9, week ending 12/20/23. And the 1 year bearish high was 50.3. Yes, right here. Week ending November 1st, 2023. Now, unfortunately, it's been proven that the bottoms in the market, when the market takes off, can be predicted by bearish highs. The top in the market cannot be predicted fairly with a bullish high. So it can go much, much higher. So we'll just have to wait and see. Stock market's typical performance over presidential cycles. An election year, first presidential year, second presidential year, and third presidential year. Look at this takeoff. It does show a pullback here, and then it continues upward again. So that's a look there. And once again, I just wanted to show this. Be prepared for what may be ahead of us. So that is that. Let me share the screen. Go back to, let's take a look at first at the NASDAQ, which has been the leading index. So this is November 1st, week ending November 1st. Right here, what happens here? This is what I like to call a pocket pivot, or a bottoming base. Starts right here on 11/1. And look at this move ever since then. Got a little bit of a pullback here and here, but it has been trending higher. Now what happens next week is what we need to watch out for. So let's take a look what was moving. Pull the screen up here a little bit. Up 3%, 50% increase in volume. Macy's was up big on that buyout offer. So cash offer right here in the middle is up about 4%. Seco International, environmental actually, big swing down. Look at that move. And it was up 7.44% on Friday, bouncing off the 20-day moving average, moving higher. Pull this down a little bit so we can see the volume. Pretty good volume. Nothing has been as high as the sales here, so definitely need to keep an eye out there. Vital Farms produces, sells pasture-raised organic eggs, butter in Texas and Missouri. This is showing institutional, these little ants. I believe this is David Ryan developed this when he was running the mutual fund for O'Neill and Company. Now, these ants can appear either when the stock moves up or when it tops. So we may not know this till later. Just beware. Earnings are up 325%. It is quite extended. I wouldn't recommend anybody buying here. Volume was pretty high 2 days in a row. This is a little lower the day after. Paymentus Holdings gapped up. You know, I don't like anything that undercuts a gap, but it could improve here. Provides cloud-based platform for bill payment technology by an omni-channel. Clean Spark had a pullback. To me, this looks like a high tide flag. So let me just draw the flag. That's a flagpole. And this is a flag waving in the wind. Usually it has to double in price. So this has doubled, and a lot of flags, as from our educational series shows, often double again. We'll look at another one of those in a moment. But what's up 5% and 100% increase in volume? Well, we still got Seco Environmental. We got 12 items. Not sure we'll go through all of them. America's Carmart up 6.74%. They couldn't hold above this. We'll see if this is a bottoming base. See if we can move back up here. Reported negative earnings of 1.34%, $1.34 loss. DACO New Energy, China company, manufactures and sells polysilicon. So we breaking out of this looks like a bottoming base. Came above the 50-day moving average. Just might have been the day to buy. $20.69. I'll look at all this volume. This is nothing but professional money management, I believe. DXP Enterprises, bearings, industrial machinery, kind of breaks out here. This would have been the moment to buy at 36.28. Now it is too stretched to buy. But look at all this volume, 124% earnings increase. Look at this, 211% earnings surprise. That is why it is moving up rapidly. And this isn't your Uncle Al or Aunt Edna buying the shares. Gap might be viable. Let's see, closed at 20.92. So as David Ryan said, just draw the line. Just draw the line. It was up 8%. Look at this massive volume. Earnings up 165%, 117% earnings surprise. Not everything has to be in tech. So HCI Group offers property and casualty insurance for homeowners. About 1,000% earnings increase. $3.22 versus 6 cents. 128% earnings surprise. Big gap up. Closes in the middle of its range, up nearly 14%. Samsara, that's what I'm talking about, up 14%. 300% quarters in a row. Talked about them in the news. MoneyLion provides full service digital platform to deliver mobile banking, borrowing, and investment solutions. Got a gap up in earnings. Nothing to really write home about. They had a 44-cent loss. I guess it beat expectations and continues to move up by a little over 10%. Navios Maritime Partners. Look at these ants. Ants are crawling all over this. So it's up big time. This is the place to buy right here. Right now it's extended. Wouldn't risk buying this because on any type of pullback, you would be severely hurt. So massive volume. Opera ADR. Norway-based company designs and develops web browsers for mobile phones and PCs. We definitely got a breakout here. Up 8%. We'll wait to see if there's a little bit of a pullback, but massive volume. Earnings were up 411%. Not sure why the earnings aren't showing here. But Swiss Wesson brands, their earnings were down 24%, but it was an earnings surprise of 81%. Gaps up. This would have been the place to buy. And look at this continuation, up nearly 30% in the day. Well, Willdan Group provides civil engineering, building safety, economic consulting services. Gaps up big time. 122% earnings increase. 111% earnings surprise, up 24%. Pretty massive volume. Looks like the highest volume in some time. Definitely above all these levels. Let's see if it'll draw the line. Not sure what's going on here. There we go. Any way you draw the line, it has cleared it. Could even draw the line right here. Off this bottoming base. This would be a base and base. This would have been the buy point. Let's see if we cleared everything here. That is everything. So let's go take a look. What was going on? I woke up, was really excited. And look at NVIDIA is down another $24. The market closed. Another 2.7%. It's getting close to 10%. It definitely could go down 20%, come down to its 10-day moving average or its 20-day moving average. It was the most stretched it's been in a massive amount of time above the 50-day moving average. This thing that you need to look up forward for to try. A lot of people are talking about it's going to hit 1,000. I just think got ahead of itself. doesn't say anything about the company as a whole, but you need to look at technical factors in the market. Take a look at super microcomputer. Didn't pull back as much, down 1.7%, maybe close to NVIDIA's continuation after hours. So we'll just have to see. Just can see, look at all these ants crawling here. Now this company has had several, or at least a couple high tide flags. Look at this. This would be the flag. Let me go over here. This would be the flagpole right here. And right here. It's a flag. So what did it start from? Started from 171.67. And in reality, I'd been talking about this company not that far back. Not that far back. Right about here at about 70. And it bounced off the 20-day moving average. It's just kind of waving back and forth. So it's up to 94.99. So when I bought an option and I started selling the $85 call short. Did that about 2-3 times. And I should have kept it all along. Who knew how far this was going to go? So here we go. Here's the flagpole, high at 227.71. Where did it get over here? I believe it went as high as 353, maybe it was 347. I think I sold the $70 when it got to 326. And then it has a pullback. And here's another flag. Let's see this. What is the day here? This is January 1st. Let's go to the daily. Here's the 19th. So here's the flagpole. And here's the fabric. So this is the second high tide flag. This should be a technical warning to you. Now look at all the volume over here. There's a periodic blue volume, blue volume, blue volume, and now look at the volume just massively go up. Look at all of this. Goes up here. Everybody thinks it's a climax run and it's over. Believe me, it's not over. Their earnings based on what they make, they're not overheated, the stock price. So it pulls back here. And then we went back into the stock on this pullback. Somewhere in here, we bought it at 725. We have the option. We haven't converted it yet, but here we go. We'll just, this week will be a big key of where it goes. So that's super microcomputer, AMD. We talked about the Nicholas Darvis box formation. Has to be like 5 weeks. Said when it breaks out of this box, it is a buy. So we put on one at 175 option here. And then when it broke out, we put on some more. We put on just the option, the call options. sold it when it hit about 208. And then on Friday, it went up and then turned tail when NVIDIA started to sell off. So it went up to a high of 227, and we'll just see if it can recover. So that's, and then Qualcomm, we started over here, I believe, right about here, the 160, 165, and we rolled it to the 165 to 170. And we still have some naked options on Qualcomm. We may have a decision coming up this week, so we'll wait and see on that. Microsoft is big time in AI. They have much lower volatility. They did have a little bit of a sell-off here, but nothing to go run and hide about. Pull back here, went up. They seem to be in a much tighter range. Meta, we did close out 20 shares on Friday. Figured it was wise to take some profits. Took it out, I believe it was 500. So we initially bought it at 395, and then added to it. So we'll just see where this kind of goes. NVIDIA and Meta seem to be the two strongest in the big seven, big cap tech. And then there was a couple other things I wanted to take a look at. So take a look at TAP. Not sure if this looks a little different on my handset on the daily, and it does here, but it's a possibility that this might be a pocket pivot. I'd like to see the volume a little higher, but this is something to take a look out. So where would be the breakout? It's at 6401. So it has cleared this range. Just kind of see where it goes. Take a look at Bud. In Bev, ADR, big sell-off. Now it's cleared both the 10 and 20-day moving averages. Can it continue? It gapped down. Got some good volume right here. It looks like it could be a pocket pivot. Day before it was down, but this is what you like to see, low volume. Now I know we got a high volume here, but then the rest of it on the down, volume is trending down, higher volume, like about 4 days later, and we'll just have to continually watch that. So this is the new ad on this breakout right here. We added some. It had a big swing down on Friday. Tried to go above 30 and then met a lot of selling pressure. Talked about this about a couple of weeks ago. We met one of the executives there, and this is the Emeryville based company. So we'll continue to watch that one. So Square, we had this as earnings option. And we sold it because we didn't like this undercut of the gap up. But now it has cleared above that. So we added it back as an option. So we'll just see how that plays itself out. Toast was another earnings option winner. I believe it was right. I think we put it on before it went above the 200-day moving average. And I had a pullback here and then a big gap up on earnings. It did undercut, but it was pretty close to the bottom there. So we decided to keep it, and it's playing well. So let's look at 4. This was another big earnings winner. We put it on right in this area. I believe it was 77. And moved up, and here's on earnings, moved up 86.74. We did close it because it started pulling back, and it's pretty volatile. Kind of bounces all over the place. So we'll just kind of see if it can tighten up, and maybe we might put it back on. Another earnings winner that we had taken off, Duolingo. Put in, I believe it was right in this area. Here we put on the option, pull back a little bit, and then a big gap up. But this is where we sold it. Like I said, we do not like it when it fails, when it takes out the bottom of the gap up. And this is our part of our sell rules. So we'll see if it can come back. We'll keep looking at it. Let's see if there's anything else I want to just kind of highlight. So Elf Beauty, talked about this a lot. Elf Beauty, this is something that I like to call VCP, volatility contraction. Look at all that tight action right there. Volume, look at this volume. There's virtually no volume at all. And what was happening during this time? The analyst was virtually banging the table, saying how great a stock this was, and we had profiled it right here on our show. Said we were putting on 4 stock options on ELF. Had a strong feeling it was moving higher, and we would exercise them. It did, and then it just, look at this move. Just continued higher. We had a little bit of a pullback here. Say if it bounces off of the 20-day moving average, this is where professional investors, mutual fund companies will support it. And we did not buy there. I'm not sure if I was asleep at the wheel. But move up to 164. It pulled back here. We added 260-day options on it. It pulled back further. We added even a shorter span. I believe it was maybe a week out. $255 options came back up here, came above that range, and we executed them. So we moved from 400 shares to 600. And then look at it move right before earnings. Moved up to 100 and I think it was even 179. We sold those $260 options. We didn't want to trust it. And then it was a $4,000 profit. And then it just became real wild on that next day on the open. Moved up after hours. We added 167, 100 shares, and I believe it was 174, 50 shares. On the pullback here during regular, we sold the 50 shares and kept the 100, and then it just kind of vaulted up. And then at 208, we sold 100 shares, pull it back to 600 shares, and now we sold a $250 call option on those remaining shares. And we're pretty confident that that will not get hit. So, and if it gets up there, we can always take it off. So no big deal, but it's a way to have a little bit of a dividend and increase the amount of money we're making on shares we already own. And then Kava, really like Kava, liked it over here. Talked about what an IPO base is, 16 to 25 days. Alerted people when it was a buy at 42. 2 days later, JP Morgan agreed with us, put a $49 price on it. And then when it went up to 58 and then fell to 52, it said it was a sell. Most IPO bases fail. Felt it was going to fail here, and it went from 52 to 29. And then when it bounced between 29 and 30 for a while, said when it came above 30, said it was a buy. And it has been, so this is the IPO area. Here's where it came down to 29 and went up to 35, 36. So I believe it was right in this area. Pull back. No, it was right after here, right here. Put it on, was a little tighter, pulled back a little bit. So I had 1,000 shares. This was on a story that a drive-through salad company was going to cut into their business. I said, I'm not really scared about that. So I said, I'm adding 600 shares. And here it came up to here. Could have added some more shares right here. And on this day, it kind of alerted me. So on this move up, I took off 600 shares. And then on this day down, I should have been looking at the lines. It's not too bad to pull back to the 10 or 20-day moving average, but I did sell the 1,000 shares here. And right now, about $46 option, converted it. And then sold them. I believe it was right over here. Pulled back, and then as it moved up, about the $49 options, have 15 $49 options. Pulled back right before earnings, and then it jumped on earnings and can convert 15 $49 options when the stock is at 63. So that is a story with Kava. And is there anything else I want to just showcase? Let me just take a quick look. Don't want to make this too long of a show. Yes, I want to just take a look at two others. BLTE. We looked at right around this area when it got tight. We put this on. A few days later, moves up to 36. And we sold right here, pull back. Then we added it right again, right here, a little breakout. And then we sold at 46. The same stock that we were looking at the same time, we failed to put on an alert. So bad me. What happened? So we initially, I think it was right about here, and we sold it, pulled back a little bit. And if we had an alert, could have bought right about here. And then it pulled back again, pulled back even lower down to $8. And then it has just popped significantly. It's beginning to look like a high type flag. Here's a flagpole. Here's the flag. So news has that the CFO and the CEO have been adding additional shares to their holdings. Um, so that is why it's moving. And I believe they also signed some sort of agreement with Europe for one of their drugs or development. So that's kind of the story there. We're going to end it there. This has been Mornings with Michael for information and educational purposes only. Hope everybody has a great weekend. We'll catch you on Monday, and we'll see where all the action is. Thanks again. Mornings with Michael is for information and educational purposes only. It's your responsibility to do your own due diligence, find what is a good risk for you to take. We're here to help you make your money work harder than you do. And if you have any goals or activities that we can help you with financially, please let us know. Keep working on your goals and activities. Keep surprising all those people around you. And let's make this world a better place, because everybody can use a little bit of inspiration out there, and we can do it together. Have a great day.